All right, mate. Let's have a look here. You picked some a bag from April. Okay, you picked up around 29. Yeah, well done. Well, 29. I mean, obviously it was a bit rough when it dipped back down, but very nice. Now, normally when you get a large candle like this, there can be some higher prices. So I would suspect at this point, though, this is done for the day. I would suspect. Let's look at the 10-minute chart to see. Um, Well, there's a bit of some large volumes here. I suppose that was a little bit early, but then when you can start forming these sort of patterns, ascending, and then you get to pull back out of these. Maybe it wants to pull back out of these. Um, any other examples of these? Well, I mean that was a longer ascending, and then you break down out of these. So we kind of have a similar sort of structure here to where it may want to start breaking down. But I would probably imagine that this is done for today. Um, but the overall pattern, because of the big move, it looks like it wants to go higher. But what you need to be prepared for, what if we dip down next week and have a red candle come back down? It might come back down to, well, I'm not going to say $22. I don't mean to say that, but like it might come back down to your $29 area, um, on a retrace next week before going higher, right? You have to consider that a possibility. So, you need to consider: do you want to take profit here and try buy back lower on the dip when we fill this candle? Now, of course, there's the risk then that you don't get back in, because what if you have two large candles like this back to back and it just keeps going? So it's really up to yourself. If it was me, I would probably take 50% of the profits at least up here, and at least then you're paid for the trade. And if it does come back down here somewhere, you could re-add that 50% at a lower base, and then you would have profits and back in at the entry. Or if you really want, you could take all of it on a gamble, that you'll get a dip next week, and then look to buy back in around your entry price again, and that way you've at least taken some profits. I'm not sure what sort of profits you have at this point. Very roughly 20% profits, 25% profits maybe. So it's really too early and tough to say if there will be that dip back to $29 level. If it was me, I would probably take profits, because either you can buy back in down around the $29 level again, and that would mean you're back in the same spot with profits in the bank, or you could trade the new weekly candle just like it did here. If it opens up and flips green, you could attempt to get long again, with a stop below if it's going to have the second weekly. So that's the way I like to play it. I like to take my profits and chance my arm again and get in, protect them profits in the bank, lock them away, and then if it'll give me the opportunity on the dip to get back in again in the same place, or try the new week and try and go again. Totally up to you how you want to play it.